Hello, board members. I'm presenting to you today about a big decision we have at Peloton. Should we head to the gym? So just briefly where we're at right now. Of course, Peloton Interactive Inc. is publicly traded fitness and wellness company. Our NASDAQ ticker ID is PTON. And as of last year, we reported a highly engaged community of over 5.6 million members across 6 countries. Our business model combines fitness hardware, recurring subscription, digital content, and commercially certified products. Our 2026 Q2 results showed that we were maintaining profitability while we've continued to invest in innovation. Even though our revenue declined slightly, our earnings before interest, taxes, depreciation, and amortization improved because Peloton operated more efficiently and managed costs more effectively, showing that our underlying business is strengthening. Our commercial business is also showing momentum, with management reporting double-digit year-over-year revenue growth in that unit. So right now, we're looking at expanding into gyms and other heavy-use commercial locations. And, we've announced this launch last month, including a connected bike and treadmill designed for gym floors. So if we were to issue stock right now, that would provide capital for this expansion, but it also risks dilution and a negative investor reaction if our timing is poor. And that's why the board's debate centers on market efficiency. If public information is already priced in, then maybe the timing doesn't matter as much as we might think it does. So let's talk about market efficiency. Is the market efficient? Investors and analysts rapidly incorporate public news into share prices. So our commercial strategy is already public, and much of the valuation of that announcement may already be showing in the markets right now. So in semi-strong form market efficiency, we can say that stock prices adjust very quickly to all publicly available information, and but acknowledges that not all information may be public, that sometimes markets do overreact, that investor sentiment can impact prices. If they're feeling negative, they may make decisions that are based on other things than what the analysts are saying. We don't want to give the wrong look if we were to, we don't want it to look like we are diluting our stocks by issuing stocks. That being said, I think we should move ahead now. Under semi-strong efficiency, our public results and expansion plans should really already be reflected in the current share price. The broader fitness technology market remains attractive. Fortune Business Insights projected the global fitness tracker market to grow from 8.4 billion to 486 billion by 2034. So we have a real operational catalyst here in our entry into the commercial market. It's not theory. That being said, we know things are going on in the world today that make the market uncertain. The impact of the war in Iran is real, but the AP is reporting that the markets are not reacting as strongly as we might have feared to the uncertainty of that ongoing situation. So my conclusion is that even though there is some instability right now in the markets in the short term, it's not as much as we would fear, and we could miss a real opportunity for expansion given that we have the data that shows that over the long term we can expect growth. So let's issue the shares now. Let's make our communication really clear that we are framing this offering as a growth capital tied directly to our commercial gym expansion and nothing else. With that clarity, the markets should react as we predict, and our stock prices should remain stable.